afternoon, I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. US-China trade talks continue to dominate global equity market sentiment. The week started positively after it was signalled that the US and China were edging towards an initial trade agreement, Phase 1, following constructive discussions between China's Vice Premier, the US Trade Representative and the US Treasury Secretary. However, global equity markets reversed these gains as the week progressed amid concerns that a US bill supporting Hong Kong's autonomy could throw a spanner in the trade negotiations. And if the Phase 1 deal isn't signed by the 15th of December, then there is a good chance the next round of US tariffs on Chinese goods will kick in. Then sentiment changed again today as Donald Trump said a deal was very close, while his Chinese counterpart said China wanted to reach a deal, albeit based on mutual respect and equality. Elsewhere, the minutes from the last Fed meeting held on the 29th to 30th of October show that there was a reasonable amount of disagreement on the committee, with a number of policymakers not happy about the third back-to-back interest rate cut, despite agreeing that the risk to the US economy remained elevated. Now, this probably explains why the Fed agreed to put interest rates on hold, barring a material reassessment of the outlook. Now, we aren't sure what exactly the Fed means by material reassessment, and therefore what would prompt the Fed to cut interest rates again, but no doubt we will find out next time they cut interest rates again. Now, despite having a compressed week in the US due to Thanksgiving, we still have plenty of data due next week. From the US, we have consumer confidence, the second reading of Q3 US GDP, durable goods orders, and the Fed's Beige Book. Elsewhere, we have Eurozone confidence, unemployment, and CPI, and Japanese industrial production, unemployment, and CPI. Now, that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting the markets in the email.